All right, our next analysis here is on Euro-Swiss franc. Now, we have a recent, this week, Euro-Swiss franc analysis for a higher time frame move. The way prices played out, I see a potential lower time frame entry that I like, okay? So let's talk about the higher time frame, because no matter what, any entry, whether it's on the 4H, the 1H, the 30 minute, the 15 minute, we must start on the 1 month time frame. All right, so we're on the monthly time frame. We've identified on the monthly as well our weekly upper and our weekly lower zone. Now, if you want to go through that again in more detail, go to the previous analysis. Now, what are we seeing here? We're seeing nice push and exhaustion cycles. Okay, push breaking the weekly to the downside, exhaustion, sell pressure entering the market, continuation of push. All right, so what are we seeing here? Price is now trading beneath this weekly lower zone. Okay, now what's important here? This is a break to the downside. This is a significant area of buy pressure. So this move to the downside is considered a push. All right, push to the downside. What's next? That's right, you know it. Exhaustion to the upside. Now, what's important here? If you watch the live, you know that there's something very, very important. Okay, this time frame is giving us a lot of information. Why? After a push to the downside, in this case it's to downside, an exhaustion, a continuation of push will usually break beneath previous low. All right, that's usually the highest probability play. The fact that price failed to break beneath previous low tells us that there's a lot of buy pressure. It tells us that someone, a big player, institution, government, bank, does not want price to go any lower. They do not want any more devaluation. So the fact that price has failed on a push and exhaustion cycle to break beneath previous low tells me that there's buy pressure, telling me that I'm not really looking for any entries to the downside at our daily mid-range zone. But what do we see? We see price has sent price back to our weekly lower zone. We do see an injection of sell pressure entering the market. So let's take a closer look. All right, we've taken it down a time frame. What do we see here? We added area of sensitivity, horizontal sell pressure. We see horizontal buy pressure, and we identified a mid-range zone. We have lower time frame area of sensitivity as well. So we also identified an uptrend. Why? Respected higher lows. Okay, so here's our higher time frame move to the downside. What we said was, if price is able to break this lower zone to the downside, we have a higher time frame exhaustion, or sorry, continuational push to where? To our next area of significant buy sensitivity, which is TP3 at our daily lower zone. But I do see potential for a lower time frame entry. Where does this lower time frame entry come from? If price is able to break this mid-range zone and this uptrend to the downside, because we know that there's significant buy pressure, price has got clear range to its lower zone. So when we look at our lower time frame entry, what are we waiting for? We must stay patient. We're seeing buy pressure again because this is an area of strong sensitivity. So if price is able to break this area of sensitivity to the downside, that's a push. What's after a push? Exhaustion. Then we're waiting for a bearish engulfing candle close, which is price action confirmation to the downside. TP2 is at its lower zone. Once price reaches TP1, we move SL to entry. And what would make this trade invalid? In the event that price fails to break this area of sensitivity to the downside, we know that there's just too much buy pressure, making this trade invalid. So in summary, for Euro-Swiss franc, price must break area sensitivity for a lower time frame trade, and once it breaks its lower zone to the downside, we have a higher time frame move to the downside. All right, so that's it for Euro-Swiss franc. On to Euro-Aussie.